By the way, here is the headline you are probably not reading today. Housing prices are actually going up. The median price of an existing home rising in August for the first time in 12 months. So could now be the time to buy. Let's ask Gary B. Smith, Tobin Smith, and Danielle Babb. Danielle is the author of Finding Foreclosures. Danielle, you first. Now the time? We hit the bottom? No?
Now, between now and spring, I believe we are hitting lows in some areas. This 4.3% existing home sale figure that came out today, the decline, is really localized to the west, 10%, and to the Midwest, 5%. Those are the areas to start looking into buying. Okay,
but meanwhile, the South, Northeast, overpriced areas to begin with, still vulnerable.
Still vulnerable. But we do have strong demand there. We've got 10 months existing inventories across the nation, but primarily that's on the West Coast.
Okay. All right. Having said that, Gary, if she is right that now we do have signs of strength in different pockets of the country, what are we to make of that?
Well, I think it's exactly the point that I hope Danielle was on, in that we are near a bottom. I think the other thing you need to throw into the equation, Neil, is with the Fed lowering rates last week, that's going to have a very positive effect on mortgage rates, adjustable and fixed. So I think that bodes well for the market. And the other thing, the big signal for me has always been the prices of the housing stocks. You know, you saw Lennar and others take a hit, but they were actually up from the open today. So that tells me people think the future is bright for the housing stocks, and that indirectly means I think the future is bright for the housing market.
Yeah, but Toby, boy, these have been really hit issues. I mean, dead cat bounce, whatever you want to call it.
Well, first off, we continue to be short the housing stocks because there's another level of pain, Neil. I mean, you probably could make an argument that if you wanted to buy a home over the next 6 to 9 months, I would buy that from a new developer. I would go in, they mark their homes up about 25% over cost. I would go in with a bid that was 25% under what they were asking, and I would watch them say yes. They are going to have to get that off the books because they have to carry and write down this inventory. But for existing homes, in most areas that we had this overbuilding, Neil, it is not the time yet to be out to be an aggressive buyer. We have another leg down here because the prices going up, Neil, was only a function. There was so little homes sold. The homes that were sold skewed higher because they were in larger areas.
I just wonder whether we get a slowdown. Everyone seems to think it's building that we're going to get one. That just as we work off this inventory, wham, bam, boom, we got a slowdown.
It's possible.
Do you think that's going to happen?
I don't think that's going to happen. I think that starting in the spring, when the rates start catching up, I've been watching mortgage rates since the Fed cut the rate, and I haven't seen a substantial change. In fact, some banks have actually slightly increased it. So I don't.
So we should stress adjustable rate mortgages pegged to short-term rates. Those have come down.
Correct.
But the overall rates that people finance at fixed 30 years, that 15 years, they haven't changed.
They have not changed.
Actually, they've ticked up a little bit.
Yeah, some have ticked up. Some lenders have ticked up. Now, HELOCs have gone down substantially.
What are they?
That's a home equity line of credit. It's where you can actually borrow against the equity in your home.
Are people still doing that? I thought that was over.
People are doing it to help keep themselves out of financial trouble, especially those facing foreclosure. We had 240,000 new foreclosure filings just in August alone. That's a huge increase.
All right. Now, Gary, a moot point for you because I know you pay for your homes in cash, but what happens now, Gary? Let's say everyone expects the Federal Reserve to keep these interest rate cuts going. What if it does not? What if it was like a one and done and there's the fun deal?
Well, but then I guess you got to look back at, and think back some of the rates that probably you and I paid, 10, 15 years ago for homes. I can remember up, when mortgage rates were 10, 12%. Now, maybe I'm dating myself a little bit.
Very good point.
Historically, they're still low. And yes, there's always going to be parts of the country where there was a little bit of bubble or things got overheated. But I think, the data you led with, the fact that the median price has started to inch up a little bit, I think that bodes well in saying that we're probably near a bottom in the housing market.
Do you agree with that, Tobin? The bottom has come and gone.
No, we have a long way to go, Neil. I mean, we've done a lot of research on this, and the fact of the matter is Dr. Smith is dead wrong.
All right, guys, thank you very much. Our favorite guy, Mohamed is